Hi everyone, welcome back on my YouTube channel, Yosie Olivia. I'm from University of North Sumatra, majoring in accounting. And this time, I will discuss about Consignment Sales Accounting. The definition of consignment sales. Consignment is a sale by means of the owner entrusting goods to another party to be sold at a price and terms set out in the agreement. The consignment agreement contains the rights and obligations of both parties. The parties involved in the consignment are: the first, consignor. A consignor is the party who entrusts the goods or the owner of the goods. The consignor will keep records of the goods entrusted to him as inventory as long as the goods deposited have not been sold or are waiting for a report from the commissioner. The second, commissioner. The commissioner is the party who received the goods deposit. Consignor and the commissioners benefit from this consignment. For consignor, through consignment, it can indirectly be used as a means of promoting their product and increasing sales turnover and expanding the marketing area. For the commissioner, will get a commission if successful in selling consignment goods. In addition, the commissioner does not need to increase working capital to buy merchandise inventory and does not bear the risk of loss if the goods deposit don't sell because they can be returned to the consignor. There are two recording methods that can be used by both the consignor and the commissioner. The first, separate method. Under the separate method, profit or loss from consignment sales is present separately from a gain or loss from ordinary sales or other sales. This is done with the aim that at the end of the period it can be known how much profit or loss was obtained from consignment sales, how much profit or loss was obtained from other sales. And the second, non-separate method. Under the non-separate method, profit or loss from consignment sales is not separate from gain or loss from outright sales or other sales. This will result in, at the end of the period, the company cannot know how much profit or loss it has earned from consignment sales and how much profit is made from ordinary sales or other sales. To find out how the accounting treatment of consigned goods, whether held by the consignor or the commissioner, is described as follows. Accounting held by each party. The discussion begins with the application of recording methods. The first, separate method performed by both the consignor and the commissioners. The second, the non-separate method implemented by both and the consignor and the commissioners. The following is the account treatment of consignment and consignor. The first, separate method. A. Accounting by a consignment. Every transaction related to a consignment sale, whether related to income or expense, is recorded in the consignment goods account or consignment out. The consignor records or journal when: the first, leave the goods to the commissioner. The second, receive the consignment report and from the commissioner. Transaction related to consignment delivery and cost of consignment sales will be debit. For example, the first, when delivering goods to the commissioner, and the second, the cost of sending goods to the commissioner. 3. Commission fees. 4. Cost incurred by the commissioner but reimbursed by safeguard. Transactions related to the sales of consignment goods and consignment revenue will be credited, namely: The first, when recording consignment revenue. The second, consignment profit. The third, when receiving a report on the sales of consignment goods. So, the consignment goods account is recorded either debit or credit. Debit when the goods are sent to safeguard, and credit when the goods is safekeeping how actually been sold based on the report from consign. Accounting by B. Accounting by the commissioner. For the consign, every revenue transaction related to the consignment sales is entered into the commission or consigned in good account. The commissioner only keeps a journal when the first, selling consignment good. 2. Second, issue costs associated with the consignment. 3. Record commission income. 4. Transfer of money to the consignor. Transaction related to consignment income will be credited, namely recording the proceeds from the sales of commissioned goods. So, the commissioned goods account is recorded either debit or credit. Debit when commission items are received from the consignment, and the credit when commission items are sold to other parties. 2. The non-separate method. Accounting held by each party is as follows. A. Accounting by observers. Since the recording is not separate from regular sales of other sales, there is no difference in making the journal. Accordingly, revenue and expense from consignment sales are recorded in the same manner, and revenue and expense from ordinary sales or other sales. The regular keeps a journal when transaction incurred shipping costs to commissioner, transaction receive consignment report, and transaction receive money from commissioners. B. Accounting by the commissioners. As with the records made by the safeguard in the commissioner's book, if the sales of committed goods is not separate from ordinary sales or and other sales, the journal is in the same ways so that there is not privilege. Income and expense related to the commissioner's activities are recorded as well as income expense related to outright sales or other sales. The commissioners keep a journal. The first, when incurring costs associated with commissioner activities. The second, when selling commissioned goods. The third, when submitting a consignment report to security. And four, when sending money to the security. And now I will give an example of a consignment sales accounting transaction. And you can see, and this is the answer. Can see the next answer, and the last answer. Okay guys, thank you for your attention, and apologies me if there is an error. I hope you all can understand what I explained, and see you next time. Bye bye. Hi everyone, welcome back on my YouTube channel. Hi everyone.